So it's the first week of April. I finally got the email, get to dive in to some of the data. And it being the first week of April means, yes, that's right, the Q1 market update. Let's take a look at the data sent by WeCar for the Windsor-Essex market update for Q1 and see where we stand and see maybe where we're going from here. Thank you for watching Real Estate Talk. My name is Tom Scully, digital real estate agent, and let's get into the information. So guys, let's dive into the data. I'm going to read some things off my monitor here sent by WeCar. We're going to try to interpret that data the best we can and maybe apply it onto what we might think happens in the future. Now, the data is factual, of course, but my interpretations are my own. Only time will tell if they're correct or not, but let's go through the information and see what's going on. So the market activity, we're up 21% for available listings at the time of report. Now, that's quite a bit, 21%. This is year over year from March to March. But market activity for year to date, so 25 to 24, we're up almost 20% as well. So that means the current amount of listings that we have right now is basically 20% more than we did at this time last year. And we had the idea that we're going into this year going to have a really strong market, not just buyers market, a really strong market because the interest rates were obviously coming down. So even though the interest rates are obviously coming down, they're quite strong. The market activity, with listings is quite high. But as we're going to see right here, the sales are pretty low in comparison to both last year and year to date. So for the sales for March to March, year over year, we're down almost 22.5%. That's quite a bit. Going into the strongest time of the year, going obviously pre-sale spring, going into spring and eventually into summer, down 22.27% is pretty staggering. And year to date, we're down 13.11%. 2025 versus 2024. That information is pretty glaring, right? So we have a lot of listings. We have a lot more listings than we did before. Obviously, that's going to be affected because of the fact that sales are down. So that's current listings available. Now, the listings are obviously quite high. The sales are down quite a bit. And that just showcases, obviously, a lot of the things that we were having, the concerns we have geopolitically in the area. Of course, everybody knows by now, we are into tariffs, and today it is April 3rd, so the automotive tariffs were levied yesterday. So going to find the full impact of that, but we already saw that Stellantis is going on a shutdown. Not great. Of course, a lot of our local GDP is going to be produced in the automotive industry. It's almost 70% of it. So it's obviously going to have an impact on the housing market to a degree, and we're seeing that throughout. The thing that I find interesting is next. You would assume, obviously, with sales going down, listings going up, the average price of homes would be dropping. And while we did see a little bit of that in February, it's the opposite for March. So the average price of a home across Windsor-Essex County, all houses, all areas, the average price of a house is $583,182. So it's up almost 3% from March of last year. And year to date, because that was month over month, right? Now we're into year to date, we're up almost 1.5%. So the year to date average is about $571,971. What I'm seeing by that, because this is the thing that's really telling. We have a lot of listings. We don't have as many being sold, but we have a ton of buyers in the market. And I genuinely mean a ton of buyers. Some houses are flying off the market. Some are sitting. Now, this is obviously the price point of the homes. A lot of the homes are still entry-level homes. They're still being bought quite quickly, especially if they're fully ready to be moved in. Those usually go pretty quick. Now, the mid-tier homes are still moving, but I think that's at a little bit lower rate. I don't have that data in front of me, but if I were to guess, it is if people are already in the market or are hoping to upgrade, they're probably not doing that right now. That's your, middle income families to higher income families. They're either looking to upgrade or maybe move locations within the area. They're probably not choosing to, buy or sell at this time, mainly because of obviously the economic uncertainty of the area, given the tariff situation and us going into a federal election. People that need to buy homes are for first-time buyers, which we have still a lot of. Well, they still need to buy homes. And if they're not affected by the industry, then they still have a pretty strong purchase price. On top of that, this is me and my own take on this. I think sellers aren't buying it. And what I mean by that is I think sellers are willing to hold out, thinking that a lot of this is going to blow over, and it might. And they're not willing to let go of a house unless they have to, for any real loss. And what I mean by loss is, potential loss if they were to wait and maybe sell it a month or two later. So the sellers aren't really dropping their prices or their expectations. And the buyers are still having to reach a little bit more, considering the interest rates are going down. They have a little bit more to spend as well. So sales are down. Inventory level is through the roof. No pun intended. Yet the average sale price has been higher. Kind of an anomaly, but I think we were looking this year, or at least I had projected this year, that the average price was going to go up. I was really concerned when the tariffs started to be levied, especially with the February numbers. March numbers aren't great as far as sales, obviously, but yet people are holding out. That price point really isn't moving. So if you're waiting for a market drop in order for you to either buy that first house or make that move if you aren't affected by the geopolitics, I don't think that market drop's really coming. Again, it's a ratio. If you're selling a house to buy a house, I think you're still going to have a decently strong product, but I would be putting in, especially if it's a mid-tier house, I would be making sure you protect yourself with a condition of sale. Just my own 2 cents on there. So that's pretty much it. We have a really interesting market. April is going to be, they're always really telling. Every month is super telling. But we're in such a precarious situation with our federal election coming in. We're at a really weird place, obviously, with tariffs being levied by our number one trading partner and with our local economy being spurred, obviously, by automotive being at a big handicap. Let's see what happens in April. But again, taking away from this data, sellers aren't making those huge bottom-out adjustments. So if you're a buyer in the market, don't expect it to drop. I do see, personally, myself going to open houses, myself going to showings and going to houses with my buyers. There are a lot of buyers still out there, and there are a lot of places getting multiple offers. Anecdotally, I did have a place I was looking at with a client, and there was 16 offers on it. So that still happens, less, but it still happens. But it definitely happens on places that are move-in ready and places that are essentially just good to go right off the bat, especially for your first-time buyer price point.